Hello listeners and viewers. Welcome to Kaduna State Ministry of Education Radio and TV e-learning program designed for our SS3 and other students staying at home due to the coronavirus pandemic. The present administration, under the able leadership of His Excellency, Malam Nasir Ahmed El-Rufai, is positioned as always to ensure that under his leadership, our students are not left behind in all areas of human endeavors, especially education. Kaduna State is the center of learning. Therefore, we want to ensure that our students excel in their forthcoming examinations and beyond. Students and other learners at home are given this opportunity in order to continue learning, as education is a continuous process. Different subjects will be taught in this program to assist students to perform excellently in the forthcoming Senior School Certificate examination being conducted by NECO and WAEC as soon as schools reopen. Teachers making presentations will always provide their names and phone numbers during each presentation, and they can be contacted for questions, further explanations, and/or clarifications. The following numbers and contacts can also be reached for expression of any concern or observation: 090-865-00545 or 080-383-62072. Our website is www.education.kdsg.gov.ng. Our email education@kdsg.gov.ng or education.kdsg@gmail.com. Our YouTube channel, Ministry of Education, Kaduna State. Our Twitter handle @Kaduna_MOE. Or our Facebook page, Ministry of Education, Kaduna State. Stay safe, stay at home, and learn well. Thank you, happy listening, and happy viewing.
Hello learners, you are welcome to yet another lesson on economics. I am Obi Ifeanyi. In today's lesson, we are going to look at the same public finance part 5. Today, the part 5 is on indirect tax. The last lesson was on direct tax. Today, we are going to look at indirect tax. Let us look at what we have, the outline we have for today. We have a meaning of indirect taxes, types of indirect taxes, merits of indirect taxes, demerits of indirect taxes. We are going to start with the meaning of direct taxes, indirect taxes. Indirect taxes are levied on imported, exported, and locally made goods and services. They are imposed on goods and services, but are later transferred to the consumer in form of high prices. And that is why it is called indirect taxes. The payer of these taxes do not bear the final burden. The payers do not bear the final burden. That's why we call it indirect taxes, because they are paid indirectly. The payers of these are the importer, the exporter, the producer. They are the people that pay this tax initially, but they finally transfer this tax they have paid in the prices of their goods in form of high prices. And whenever the consumer purchases these items, they are paying the taxes that have been paid by the producers, by the exporters and importers indirectly. That's why we call them indirect taxes. Just as I used to tell my students when I teach them in class, when we are talking about tax, I say, you do pay tax. They say, no, sir, we don't pay tax because we are still students. I say, you pay what we call indirect taxes. And how do you pay indirect taxes? You buy chewing gum, you buy sweets, you buy exercise books, you buy pencil, big ruler, you buy these things. By the time you buy ruler, these rulers are produced in Nigeria, and they are sold in Nigeria. And the producer has paid what we call excise duty. Excise duty is the duty that is paid on goods that are produced and sold in the country. So whenever you go to buy this ruler, you have paid that tax that the producer initially paid it to the government, and the producer is now recovering that tax because he will put the price he paid for that tax on top of the price of his product, making the price of the product to be very high, and you will buy it not knowing that you have helped him to recover the money he paid as a tax. That is why we call it indirect tax. Now we are going to look at types of indirect taxes. what are the types of indirect taxes. We pick them one after the other and explain them. So open your ears very well and listen attentively. Number 1, excise duties. These are also known as tariffs. They are levied on goods that are produced and sold locally. When we are saying locally, we mean home. We mean internally. We mean our country. Goods that are produced and sold locally. That is goods that are produced and sold in Nigeria. The goods are not for export. You did not import them. The producers are in our country. They source their raw materials and produce those goods and sell them. Example, toilet roll, pen, ruler, and excise books. They are produced and sold in Nigeria. So the producers initially pay what we call excise duty. That is what they pay to the government. And they recover it by putting the money they are paid as tax on top of the price of the product. They spread it on the price of the product. And you go and buy it. And as you buy the product, you are paying the tax indirectly. Number 2, import duties. These are also known as tariffs. They are imposed on foreign goods coming into the country. Goods that are coming into the country. For example, you import a car from Japan to Nigeria. At the point of entry, when that car lands in the seaport or airport, depending on the means you use in bringing it into the country, at that point, you go to pay what we call, you clear the property. As you are clearing that car, that is when you pay that duty. That is import duty. You must pay the duty. Those people that try to avoid those duty by running through the bushes or through other points in the country, illegal points, when they are caught, they are seized. So by the time you pay this duty, maybe you bought this car for $10,000 and you come to the point of entry in Nigeria, you pay $2,000. That $2,000 plus $10,000 being original price makes the price of the car to become $12,000. If you are going to sell that motor, it's no longer $10,000 because you have paid what? Because you have paid extra $2,000 on top of it. It becomes $12,000 as the price. Then by the time you are spreading or you are putting the price of the product, you put it from that 12 up, depending on what you want to have as your markup. That is import duty. Or maybe you import something like rice. Everywhere, importation of rice. As you come to the port of entry, you pay duties on this rice. Maybe a rice of $10 million, you pay like $3 million as a duty. Making the price to be $13 million as against 10 that you bought it. The price is now 13. So this $13 million, you spread it on top of the bags of rice that you imported. That will now give you the final price of the rice. Number 3, export duty. These are levied on locally made. Levied on locally made goods that are taken out of our country. Locally made goods that are made in our country, but we sell them outside the country. That is when we say that we export them. For example, our crude oil we sell to China. So by the time you sell your goods to other countries, what is produced in this country, we call it export. So before you export these goods, there are duties that you pay. That's what we call export duty. They are levied on locally made goods that are taken to other countries. Even our cashew, cocoa, to mention but a few. Before you take them outside the shores of Nigeria, you have to pay what is called export duty. Number 4, purchase and sales tax. These are levied on certain durable goods and are paid by those who purchase and sell these goods. That is, we are talking about purchase and sales taxes. We say that they are levied on those people that purchase those goods. When they purchase those goods, they help in paying the taxes, which originally the importer have already paid. Number 5, entertainment taxes. Entertainment taxes are paid on entry into entertainment places. Example, stadium, cinema, musical shows, and other places. What we are saying here is that before you go to enter the stadium, you pay a fee at the gate. That fee that you have paid originally was paid by people that are managing that stadium. Or you are going to a musical show, like they like to go to musical show, watch this, watch that. the people that are organizing it have paid that tax to the government, and they recover that tax in the name of their gate fees. So as you are paying this gate fee, you say, hey, I'm paying gate fee, I'm paying gate fee, you are entering. But you do not know that you are helping them to do what? To recoup the money they pay to government as a tax. That is also why we call it indirect tax. The payers sometimes do not know that they are paying taxes. Number 6, ad valorem tax. Ad valorem tax, I've just decided to put it here for you because it appears almost in every exam. Ad valorem tax, maybe as the name implies, students mostly do not always pass this or do not always get the answer correctly. I don't know why. But I want you to use the name and know it. Ad valorem tax. Some people say it's not an English word, but what you should know is that the name is unique. Ad valorem tax. Sometimes they say ad valorem tax is dash. They will start giving you other answers. But whenever you hear ad valorem tax, what I want you to have at the back of your mind is that they are levied on goods based on their value. Immediately you hear that word, ad valorem tax, or ad valorem duty, or once that name, ad valorem, comes to your mind, or you see it as a question, what you should know is that they are levied on goods based on their value. So these duties are paid on goods based on the value of the goods. Before they are taxed or levied, they must know the value of the good. So the value of the good determines the tax that you will pay or the duty that you are going to pay. Let us look at the merits of direct taxes. We have merits and demerits. Now I want to use merits because in most of your exams they use merits. Those students, I don't know, most students sometimes we tell them merits, they will still be thinking. This is another word for advantage. We have to simplify it. Many textbooks use advantage, advantage, advantage. So most students are used to advantage, especially those ones in the local and the rural areas. By the time you mention merit or demerits, it seems like if you are speaking another language. I want you to know that merit is another word you use instead of advantage. Then demerit is another word you use instead of disadvantage. So when we are talking about merits, we are talking about advantages. Advantages of indirect taxes. Number 1, used to correct deficit balance of payment. It is used to correct deficit balance of payment. Now, we say that these indirect taxes are used to correct deficit balance of payment. How do it happen? This is done by raising import duty and lowering both export and excise duty. It is done, I repeat, by raising import duties and lowering export and excise duties. Let me explain. Correcting balance of payment, deficit balance of payment. What is deficit balance of payment? Deficit balance of payment is when the state or the country has imported more than they have exported. By the time you import more than you have exported, which means you have paid out more money, more than you receive, thereby you have problem in balancing in the balance of payment account. That is when you have deficit because you have lost some grounds. How do you organize it? By doing what? By raising import duty. By the time you increase import duty, you are discouraging importers from importing. And what do you do again? You now go ahead to lower both export and excise duty. By your lowering export duty, reducing the money you pay as export duty, you are encouraging your producers to export their products. You are encouraging them. Now, by the time you lower excise duty, remember what we said about excise duty? We said that excise duties are the duties paid by those producers that produce and sell in our country. So, by the time you lower the duty they pay, they will have more money to do what? To produce more goods and services. And you know, when you are talking about deficit balance of payment, you have imported more. So by the time you produce more goods, your people will no longer import. and those goods are sold in your country, and support export, thereby you make more money and balance your account internationally. Number 2, less difficult to collect. The real payers of this form of tax do not realize that they are paying taxes when they buy goods and services on which these taxes are imposed. People that are paying this, remember when we are talking about indirect taxes, and when we are talking about difficulty in collection of duties, what we mean here now is that the real payers of this form of tax do not realize that they are paying tax when they buy goods and services which are goods and services on which these taxes are imposed. These taxes are already paid by either the importer, the exporter, or the producer, for those that are paying excise duty. So by the time people are buying this, they may not know that they are paying taxes, because in the case, just as I explained before, in case of import duty, the importer, he has already paid the import duty, maybe for the rice. Then by the time the rice comes in, he will now add the price he paid as import duty on top of the original price of the rice, making the price to increase. But still, people do not know, because what you know is that you are buying rice at so and so price, but you do not know why the price is like that, or why the price has increased. You may not know. What you know is that you are buying rice. So people do not know they are paying tax, so they will pay it willingly without any problem. Number 3, less squabbles. It causes less squabbles. What do you mean by that? Since they are not collected with force, they cause little or no friction. You know, when people go around to collect tax from here and there, people feel that they are being cheated. You know, people sometimes, to remove money from their pocket, it's very difficult for them, especially when you call it in the name of tax, that we are paying tax. But in the case of this indirect tax, they do not know that they are paying it. What you know is that I want to go and buy a fish roll, you go and buy fish roll. I want to go and buy car, you go and buy car. You want to go and buy excise book, you go and buy it, not knowing that the producers, the importers, they have already paid these taxes. What you know is that you are buying, you go and buy, you pay your money and buy, not knowing that you are paying tax. So they don't complain. There is no friction at all, because the payers do not know that they are paying for those taxes that have been paid by either the producer or the exporter. Number 4, it is used in combating inflation. It is used in combating inflation. How do you use it to combat inflation? This can be done by raising export duty and lowering import duty and excise duty, thereby making more goods available. Remember, inflation, we say, is the continuous rise in the prices of goods and services caused by what? Too much money in circulation. And we also say that inflation is when too much money is pursuing too few goods, meaning that the goods in circulation are very few. So if you want to use it to combat inflation, what you do is to increase export duty. By the time you increase export duty, it means that exporters may not be very free to export because of the high duty they will pay. Their products may be very expensive in other countries, which the buyers may not want to buy. Thereby, keeping the goods in your country will also mean that there are available goods in the country. Instead of going to import, you now leave it in your country. It makes the goods in the available to increase, thereby reducing inflation. So it's excise duty. By the time you reduce excise duty, you are encouraging the companies to produce more goods, or you are encouraging the producers to produce more goods. Thereby, when goods are available and the money is available, the inflation will reduce. That is when the goods available will equate with the level of money available in circulation. Then the inflation will reduce. Number 5, used to protect infant industries. How do it protect infant industries? Raising of import duties, yes, will reduce or curtail the rate at which foreign goods come into the country to compete with the locally made goods. I still hope you remember what we mean by infant industry. You have to know what infant industry means before you know how to protect them. What is infant industry? Infant industries are those new industries in our country which cannot compete favorably with the already established ones abroad. So since they are new in our places and they cannot compete, for example, by the time you bring a United Nigeria textile wrapper for a woman and bring Hollandis for the woman, you see that the woman may prefer to take Hollandis. The first thing she will do is to look at the level or the line of the cloth and see whether it's Hollandis. Once it's Hollandis, she picks it as against the United Nigerian product. Now, if you want to increase the purchase of Nigerian product, what do? You increase import duty. That by the time you increase import duty, it will make those ones that are imported from outside their prices to be very high. When the prices are very high, people will not like to buy it. Then what do? You reduce excise duty. That is the duty that is paid by those factories in our country. By the time you reduce it, you now find out that they will have more money to produce, and they will have more money to produce, and they produce more goods and services in order to meet up with the level of money that is available in the locality, thereby doing what? Thereby reducing inflation. But now, in the protection of infant industries, by the time you restrict importers from importing and do what? Encourage the local producers for producing, you now find out that local industries will grow, because the increase in import will no longer allow the imported goods to come and compete with the locally made goods. The price of the locally made goods will be very low, while the prices of imported goods will be very high. Number 6, yield more revenue. The money collected from indirect taxes form a substantial portion of a country's budget in a particular period of time. The money collected from indirect taxes, especially from across the border. Sometimes when you hear the money that the customs collect at the borders, you marvel. They collect quite a big amount of money from indirect taxes. Number 7, not easy to evade. Because the repayers of this tax do not know that they are doing so when the goods and services upon which these taxes are imposed are paid. Thereby, it is not easy to evade, because since they don't know they are paying tax, what they know is that they are buying goods and services, and you cannot resist buying goods and services. You cannot need fan, and you say you will not buy fan. No, you buy fan. You cannot need car, or have a need for car. You say you will not buy car so that you will not pay tax. No, you cannot need a laptop or computer, and you say you will not go and buy. No, you have to buy, because they don't even know that they are paying tax. What they know is that they are buying computers. Number 8. It checks the production and consumption of harmful goods. When government want to check the production and consumption of harmful goods, what do? This is done by imposing heavy taxes on their production and importation to discourage their producers and importers. When you increase the duties in the producers, if they are produced at home, or when you increase the import duties, then it will discourage those importers from importing. Number 9, have less effects. Their burden is shared among all sections of the economy. Finally, that's number 10, there is no exemption. This is because everybody buys goods on which taxes are imposed. Therefore, there is no favoritism in the payment. Let's quickly look at the demerits, the disadvantages of indirect taxes. Number 1, it increases prices of goods and services. How is it done? This is because the amount of money paid as taxes is shifted to the consumer in form of high prices of goods. Number 2, it causes scarcity of goods. This is because high tariffs may discourage people from importing goods, while excise duties may lead to stoppage of production of further goods or certain goods. Remember, excise duties are paid for by those that are produce and sell goods in our country. By the time it is very high, then some of the companies may even close up because they may not have money to pay their workers and maintain their machine, not to talk of buying of raw materials. Number 3, inflation. This may set in, that's inflation may set in because of the increase in the prices of and the scarcity of goods. When the price of goods are very high and the goods are equally scarce, then inflation may set in. Number 4, it is regressive in nature because both poor and the rich buy goods on which these taxes are imposed from the same source and at the same time. You will not say, okay, this is the market for big men and this is the market for low-income earners. No, everybody goes to the same market and buy these goods that these taxes are imposed on at the same time. Number 5, it curtails investment. High import, export, and excise duties reduces profit of businessmen, thereby reducing their investment tendencies. When we say that in economics, you say that savings is equal to investment. By the time you have high import and export duties and excise duties, and there is no money for the producer to produce because of high levies or high duties, thereby, you do what? They may not have the money to invest because savings is equal to investment. Number 6, lower standard of living. This is because indirect taxes increases prices of goods. Number 7, restriction of free trade. The imposition of import and export duties do not allow free trade to take place. That is where we come to the end of this lesson. Let us recap what we have done so far. We talked about indirect tax. We said that indirect taxes are levied on goods that are imported goods, exported goods, and locally made goods. We talked about types of direct taxes. We mentioned the excise duty, import duty, export duty, purchase and sales tax, entertainment taxes, ad valorem taxes, and we talked about merits, that is the merits of direct taxes, advantages of direct taxes used to correct deficit balance of payment. Number 2, less difficult to collect. Number 3, causes less squabbles. Number 4, it is used in combating inflation. Number 5, it used to protect infant industries. Number 6, yield more revenue. Number 7, not easy to evade. Number 8, check the production of and consumption of harmful goods. Number 9, it has less effect. Number 10, there is no exemption. Disadvantages, that is the demerits. We talked about increase of price of goods, may cause scarcity of goods, it may bring about inflation. Number 4, regressive in nature. Number 5, it curtails investment. Number 6, lower standard of living. While number 7 is free trade, restriction of free trade. We go to the assignment. The assignment we have for today: 1, what are indirect taxes? Number 2, identify the types of indirect taxes. Number 3, state the merits of indirect taxes, that is advantages of indirect taxes. While number 4 is mention the demerits of indirect taxes, that is the disadvantages of indirect taxes. I repeat it again. Number 1, what are direct taxes? Number 2, identify the types of indirect taxes. Number 3, state the merits, that is the advantages of indirect taxes. Then number 4, mention the demerits, that is the disadvantages of indirect taxes. My name remains Obi Ifeanyi. If there is any problem or any question you want to ask, you can get me on my number 080-350-328-31. I repeat, 080-350-328-31. Obi Ifeanyi is my name. Stay home, stay safe, keep learning, and God bless you.